Hey guys, welcome back. Hello folks, what's up? Hey, it's a full house. Yep, yep. Are you guys seeing what is going on with LAC? It's going nuts. Hello. Yeah, some of us are involved on LAC as of now. Lithium American or something like that. What's up, folks? Hello. I should be I should be live already. Can anyone hear me or see me? Yes. There I am. Hey, hello, welcome back. What's up, folks? How are you guys doing today? Good? Hello, it's a full house. Convenient Cravings, Thomas Spector, Curly Hair Boys, Ed Spear, Team G, BG, Mary Brown, Terry Williams, Sue. Hello, Sue. Macmillan. Macmillan is always present. Yes. Hello, buddy. Lorenzo Ariza. We can now. Hi, Aisha. How are you doing today? Good. Lynn. It's spelled J. Holiday, No Sense, Out of Sight, Elisa Scott, Smooth, Daniel, Jibo, Ordinary Peeps, Delia. Please drop a comment down below and let me know what stocks you want me to go over. Hello, folks. Live from the beautiful city of Charlotte, in the beautiful city of in the beautiful state of North Carolina. Yeah, Wisdom Kume, Smooth, Lathan, awesome. Un pedacito del mundo. Mary Brown. Sandran. Hello, folks. Yeah, it's been a long day here. Yeah. I'm a bit late because I just opened a new position. Yeah. So that's why it took me longer than promised to start the stream. So, yeah. Chipotle, AMD, Amazon. Charlotte is not safe. It is. Yeah, what happened with the lady from Ukraine was, yeah, I was super sad. Yeah. She worked, guys, you will not believe this. That girl, the Ukrainian girl that was killed here in Charlotte, was working 3 blocks away from my place at a pizzeria. Yeah. Super close from my place. Mm-hmm. Sure. Hey, if I need to interrupt the live stream, it is because I am about to close a position, guys. Yeah. But I will let you know if I have to. SoFi. Okay. So let's make a summary of what happened today in the markets. So a red day across the board. Nothing crazy. Nothing, out of the ordinary. A bit of profit taking, we can argue. So the Russell 2000 went down today 0.24%. The Nasdaq down 0.95%. The S&P 500 down 0.55%. And the Dow Jones went down today 88 points or 0.19%. So nothing crazy. Take a look at the closing of the indices. A bit of profit taking, we can argue. And if we take a look at the breadth that we had today in the markets, take a look at this. Nasdaq 100, better known for you guys as the Qs, the triple Q. 54 stocks going down and 47 stocks going up. What happened inside the Russell 2000? Not a good breadth either, with 1,216 stocks going down and 751 stocks going up. And in the case of the S&P 500, a positive day, but take a look at this. 282 stocks went up and 221 stocks went down. So why did we have a negative session inside the S&P 500? Because of this, take a look. Let's go see the 11 sectors that trade inside the S&P 500. And here's your answer to that question. Take a look. The 11 sectors that trade inside the S&P 500. Today, the best performing sector was energy. This is a tiny sector inside the S&P, up 1.72%. A tiny sector from a market cap weight standpoint, of course, right? And take a look at your consumer discretionary. XLY down 0.94% today. Amazon got annihilated. We'll be reviewing Amazon in just a few minutes. Technology down 0.88%. And take a look at communication services. Your Metas, your Googles, down 0.15%. So when you take a look at the performance of the 11 sectors that trade inside the S&P 500, you understand why we had a red day in the markets today. So the largest stocks from a market cap weight went down today. Amazon, Meta went down today as well. Apple, Google had a rough day as well. So this is what happens, guys. Yeah, when the Magnificent Seven go down, it is very unlikely for the S&P 500 to be able to pull off a green day. It's just the way it works. It is what it is. I was showing this chart with the members of my Discord, guys, in English and Spanish as well, earlier on today. Take a look at this. I am actually, let me go to my Discord in English. Take a look at this. I told the members of my Discord, take a look. This was today, guys. Take a look at the time. 6:38 a.m. Good morning, of course. Happy Tuesday for y'all. Futures are slightly red. And I showed them this chart. Take a look at this. And I said, this is a weekly chart of the SPX. This is the cash index of the S&P 500. I guess that most of you guys know, and since most of you are actively trading the SPY, you should know that the SPY is nothing but an ETF that tracks the S&P 500. I have been telling, I missed an N here. I have been telling you guys during the last 2 weeks about 665, 670 in the SPY. So what information is this technical chart showing us? Let me show you here. Look, let me pull up here a weekly chart. Look, take a look at this. This is a trend line that comes from January of 2018. Resistance, look, back in 2021. And take a look at what is going on as of now, guys. Let me pull up here a 5-day, 5-minute. We failed right at this level yesterday and today as well. This is a big trend line, guys. Look, it comes from 2018. Look, January 2018. This is 2021, late 2021. And finally, the SPY made a test of this level yesterday and today as well. So far, an unsuccessful test. Look, failed. Can we make a federal case out of this? Of course not. We'll leave this in the awareness category. I think, and I've been telling this to the members of my patrons, both in Spanish and English, that I think that if the bulls cannot take out this level, and I know that most of you guys are not familiar with the cash index of the S&P 500, with the SPX, and you should, because most of you guys are actively trading the SPY. I think that if the bulls cannot burst above 668, 669 in the SPY, we could be about to have a short-term top in the markets. Maybe we have a 5% pullback, an 8% pullback. Why not a 10% pullback? It could happen. So I am being very cautious here before I start any position. So before starting any position, I am thinking in terms of what happens if I start this position and all of a sudden they pull the rug out. I am being very careful over here. How can we make a case that this trend line is no longer important from a resistance or a potential resistance standpoint? We need to see the SPX or the S&P 500 closing candles on a daily basis above 6,700 points during 4, 5 trading sessions in a row, maybe a week. That would be invalidating a potential top in the S&P 500 right at this level. 6,700 points S&P 500, $667, $669 in the SPY. So we'll leave this as of now in the awareness category. But if you open positions, or if you like to be opening positions on a daily basis, a lot of them, and if you like to be involved in trades or be involved with trades from 9:30 a.m. until 4 p.m., be careful. Be careful. How can we say that potentially we are in the midst of some sort of slight pullback? Let's just put it that way. In the case of the SPY, 5%, 7%, nothing, out of the ordinary. So keep an eye on the 5-day moving average, $662.65. This is important. I use the 5-DMA, the 5-day moving average, as a gauge in order to try to determine who is in control of a technical chart, either buyers or sellers, because as traders, guys, that's what we want to determine or try to figure out. Who is in control of a technical chart? If buyers are in control of that technical chart, I am more likely to go long that stock. And if the opposite happens, if I can make a case that sellers are starting to step in, or that sellers have taken control of a technical short, I am more likely to short that stock, to go against that security. So as of now, the 5-DMA is important. It is signaling $663. If I start to see the SPY closing candles on a daily basis below this 5-DMA, which as of today's close is signaling $663, and if we don't see a retest of that potential level of resistance, guys, that I am telling you about, between $666 up to $669 in the SPY, I might start to feel a bit bearish here. So say that we have a slight pullback here. What could be the destination to the downside in the case of the SPY? And I got to do something here, guys. Hold on, because otherwise I am involved in a trade here, and I cannot focus on the live stream. Okay, so look, this pink line, this is a 20-day moving average. It shows us the average price of the S&P 500 or the SPY during the last 20 trading sessions. It is signaling as of now $653.70. It is also coinciding pretty much with a previous level of resistance back from September 5th. If the SPY were to drop down to this 20-day moving average, we are talking about a 2.25% drop. Nothing crazy. What about a visit down to the 50-day moving average, $642? This green line that I am pointing out with my mouse, which happens to be upward sloping. It is rising. If that were the case, the SPY could go down to $642.55. This would represent a 3.85% drop. Can this happen? Of course it can. Am I 100% sure that since the S&P 500 struggled during 2 trading sessions in a row at this level that I just showed you guys, near 6,700 points? Look, let me pull up this chart once again. Look. So, am I, again, I'm going to ask the question again. Am I 100% sure that we are, so that maybe yesterday and today we started to see some sort of short-term top in the SPY? No, of course not. I need to wait for technical confirmation. Yeah, only price action pays. So I'll keep an eye in the case of the SPY. Because, let me go back to the SPY because most of you guys are not familiar with the S&P 500. I'll keep an eye on this 5-DMA, $663.17 as of now. And if the bulls cannot recapture that level, I wouldn't rule out a test of at least the rising 20-day moving average at $653.50. We can round this up, $654. So let's see what happens. It's going to be interesting. And we're a bit extended. So we can't rule out a pullback for the markets as a whole. But guys, if we zoom out here, This is a clear uptrend. The SPY is trading as of now above all the moving averages. We have a rising 5 DMA, rising 20 DMA, rising 50 DMA. So I am not in the business of guessing tops. I am in the business of understanding the message that the technical charts are sending me and acting accordingly. So this is going to be interesting. And keep an eye on this level, 663. Above $663, the bulls could be gathering momentum in order to burst above 669. If we happen to see the SPY closing candles above 669, guys, or making a brand new all-time highs, so how higher can it go? I don't know. Just set the price. 673, 675. Of course, it's possible. It's possible. There's nothing more bullish than a stock in a clear uptrend making a brand new all-time highs. But that trend line that comes from 2018, from early 2018, makes me curious. Let's just put it that way. Okay? So, wow, I have a lot of requests here, guys. Where should I start? Let me see. Open door. Let's go over open. I like it. I'll take it. Let's go over open door. Yeah, that's a stock that I am very familiar with. So it's been going down recently. So open has been going down during 1, 2, 3, and 4 trading sessions in a row. Today it dropped 15% and closed the trading session at $7. So I've told you on multiple occasions, guys, that the slope of a moving average is very important, right? Take a look at this 20 DMA, this 20-day moving average. What do you see in the case of this pink line? Take a look at the slope. What is it doing? It is rising. It is potentially pushing price up. So as of now, open has gone down 35%. It is 35% of its most recent 52-week high. This rising 20 DMA is coinciding with a previous level of resistance for open door back from early September. And this 20 DMA is signaling as of now $7. So it is pretty much coinciding with a, we can say, semi-fat number, okay? $7. So if the bulls of open can sustain price above $7, that situation could be potentially attracting buyers into this technical chart. If that were the case, we have a potential gap to the upside up to the 5 DMA, the 5-day moving average, which is starting to go down. It is starting to downward slope, which isn't positive. But this is the main level, the main battlefield that the bulls of open door need to defend as of now, $7. This is a rising 20-day moving average that is coinciding with a previous level of resistance, as I just said, back from early September. Say that this level breaks. So how lower can open door go? Let's go see. What about $5? This is a fat number that is slightly above a rising 50-day moving average, and $5 happens to be a previous level of support back from early September, and this is also a previous level of resistance back from late August. So above $7, there could be a bounce back up trade here, and if this level breaks, keep an eye on pretty much $5. And mind you, guys, and this is something that I am always highlighting to the members of my both servers, to the members of my both Discords, in English and Spanish. What we are seeing in the case of open door is a mechanical phenomenon. What do I mean by a mechanical phenomenon? Let me ask you that. Does anyone know? I mean, the members of my Patreon know. Yeah, what's a mechanical factor here? Or what are the mechanical aspects that have allowed open door to have such a gamma squeeze during, I don't know, like 2 months in a row or something like that? Let me show you this. Let me go over Burchard here. Take a look. So these are, listen up, this is a learning moment for most of you guys. Take a look at this. These are the hottest tables in the casino. Or these were the hottest tables in the casinos, in the big casino of options today. The big casino, they call it, okay? So take a look. The hottest table today was NVIDIA. 2.4 million contracts were traded. Tessie was the second hottest table. Take a look at the third hottest table in the casino, guys. Open door. Look. Unbelievable. This is a tiny, tiny stock in the markets. So what's the market cap of Open there, guys? Look, let me put it up here. Let's go see. So this is a reflection of the good momentum that this stock still has, right? So look. So Opender is a company with a market capitalization of, take a look, $6.22 billion. Now, this is not a short squeeze. It's a gamma squeeze. It's a gamma squeeze. Yeah, those are two different factors. So this company has a market cap of $6.2 billion. And take a look at this. It is leading in the big casino of the options market along with Nvidia and Tesla. Two very big companies from a market cap weight standpoint. This is really unbelievable. And Opendoor is always, it is always getting at least the silver medal or sometimes I've seen Opendoor getting the gold medal in the big casino. So being the hottest table out there. Yeah. Above Nvidia and Tesla and Amazon and so forth. So the momentum is still there because Opendoor is still one of the hottest tables in the big casino of the options market. And take a look at how many contracts were traded today. 1.6 million contracts were traded today with a positive flow, 63% in the case of call options. And take a look at these guys, the IV rank. This is important, very important. Take a look at the IV rank, 17%. 17%. This implies the IV rank at this level. This implies that all options of Opendoor, calls and put options, have been more expensive relative than today during the last 12 months, only 17% of the time. And take a look at the IV percentile, 70%. This has to do with the implied volatility. So with this IV rank at 17% and with the IV percentile at 70%, and of course we can visualize that Opendoor is still being one of the hottest tables in the big casino of the options market. So we know that the mechanical factor for this gamma squeeze to keep going is still there. Why is it? Because options, both calls and puts, are not really very expensive relative to the last 12 months in the case of Opendoor. So we have the ingredients, guys, for this gamma squeeze to keep going. Yeah. So if we say that this stock is or has pulled back of the most recent 52-week high, 40%, I think that if the bulls can sustain price above this 20-day moving average at $7, we could have another leg up of this gamma squeeze that is going on as of now in the case of Opendoor. A gamma squeeze occurs, guys, when we have a situation in which we have a massive purchase of out-of-the-money call options. Massive. So when you guys buy calls, for the most part, you're buying them from a market maker. And for the most part, when a market maker is selling us a call option, that contract is being sold naked. So that implies that the market maker doesn't have the shares that are backing the sale of that call option. They don't have the share. They are simply selling naked call options. So if we have a situation in which we have too many market participants, a lot of market participants buying out of the money call options, then that situation forces the market maker to start buying shares of the underlying asset. So the buying pressure accelerates. A massive purchase of out of the money calls, and on top of that, the market maker buying shares of the underlying asset in order to cover the naked calls that they are selling. So the mechanical ingredients are still there in the case of Opendoor. But of course, we need to mix the mechanical ingredients with the technical short. So the bulls of Open hold $7 as support, and I think that we have maybe potentially another leg higher here coming up, potentially for open there. The 20 DMA breaks, I will be keeping an eye on $5. Again, previous level of support and resistance, near a rising 50 DMA, sorry, in green here, which is potentially pushing price up. Let me take a look at the market structure of open there. Let me go see. I think that I did take a look at it earlier on today, but let me go see. Open door. What do we get here? Take a look at these guys. This is a market structure chart. On top of this chart, you guys can see the demand. What do I mean by demand? By the demand, buyers. And take a look at the supply, sellers. The demand is through the roof. Look, unbelievable. So the demand in minor time frames far exceeds the supply or sellers. Look. So yeah, this is a very good looking market structure short for open. I think this 20 DMA holds with that market structure and with the IV rank signaling how much? The IV rank is signaling 17%. Yeah, I mean, definitely. There's an incentive here to keep buying calls, out of the money calls, because they are not very expensive relative to the last 12 months for open. So, yeah, this is interesting. Let me see, by the way, an anchor VWAP, an anchored volume weighted average price line for open door from that most recent 52-week high from which open door has been pulling back. So let me delete this. Okay, let me delete. So this is an AVWAP, an anchored volume weighted average price line. So if we display an anchor VWAP from the most recent 52-week high of open at $11, not 80, $11 back from mid-September, we get an average price of $9.24. So as of now, the average market participant that started a position and opened there at $11 back in mid-September, or a few days ago, when this stock went up to $11, has an average price of $9.27. They are holding the bag. They must be a bit concerned about open door keep going down, right? So ideally, if we start a position at $7, the gap field in order to take some profits could be either the 5 DMA at $9 or maybe this anchor VWAP that comes from the most recent 52-week high of open at $9.27. There you go. Okay, let's keep going. We did open. Did someone ask about Palantir? Probably. Let me see. Yeah, of course. Of course you did. Of course you did. Yeah, let's go see Palantir, bro! So, up today 1.80%, and it closed the trading session at $182.55. I think that we got an unusual call option alert that I posted in my Discord about Palantir, guys, but don't quote me on that. Let me go see. Yesterday, I think. Was that the case? Let me see. This was today, yesterday. These are unusual options alerts that we post in Discord on a daily basis. And let me see. Oh, maybe, yeah, last week. Yeah, take a look. Take a look at these guys. So, this alert was posted in our Discord on September the 18th. So, last week. On Thursday, I think, something like that. Take a look at this. So, the day before, so on September 17th, someone, an institution obviously, invested $855,000 on call options of Palantir. Take a look at the expiration date. March 20th, 2026. Take a look at the strike, guys. Can you see it? Can you guys see the strike here? In my Discord? $250. So the date was the 18th. Let's go see what Palantir did from that date and on. Let me pull up here a 5 day, 5 minutes. So from the 18th. Look, so that alert was posted in our Discord on September 18th. And take a look at the performance of Palantir since September 18th, guys. So from September 18th open until today's open, Palantir has gone up 9.47%. Do you guys believe that Palantir could go up to $250? Unbelievable. The technical chart is looking very good. We got news into the closing bell about a potential deal with Boeing. Can that be the case? They are doing something with Boeing, I think. Let me see. Boeing teams up with Palantir on AI integration across defense programs. How about that? More good news for Palantir. So now they are partnering it up with Boeing. Go figure. I mean, this is a very good looking shirt. Palantir is above all the moving averages. We have a rising 5 DMA, signaling as of now $178. Say that Palantir consolidates above this 5 DMA, $178. Can it keep going up and make a test of all-time highs at $190? 100% yes. Yes. Sure. Is Palantir going down if we happen to see some sort of 3-5% pullback in the SPY? Yeah, it could. We cannot rule that out. If that is the case, guys, this dip ends up being bought up, more likely than not, in my opinion. But as of now, if we take a look at a 4-hour chart of Palantir, it consolidates above $178, and yeah, a potential test of all-time highs could be just around the corner. This is a very good-looking chart. Let me go see the market structure of the Messi of artificial intelligence. PLTR. Let's go see Palantir Technologies. Look, what do you see here, guys? Demand on top, and at the bottom, the supply. The demand is through the roof and clearly rising, and the level of the supply is lower relative to the level of the demand. This is a very good looking and market structure chart for Palantir that we can actually reconcile with this 4-hour chart, in which we can see a rising 5 DMA, $178. As long as Palantir remains above $178, buyers are in total control of this technical chart. Say that this 5 DMA breaks to the downside, $178. I would be curious, guys. Let me show you. At the anchor VWAP, from a support standpoint, of course, at the anchor VWAP that comes from all-time highs. Look. Let me show you. Is this Palantir? There you go. Look. $164. This is an anchor VWAP that comes from all-time highs. So Palantir went up to $190 back in early August. So the average market participant that started the position on Palantir at $189 back on August 12th has an average price, the average market participant that started the position on that day and that has averaged down on their positions, has an average price of $164. Say that the SPY goes down a lot because, oh no, not a lot, 3-5%, whatever it is, and say that this 5 DMA breaks at $178. I would be curious about this level, guys. Again, in order to potentially buy the dip on Palantir, $165. So that's a level that coincides with the anchor VWAP that comes from all-time highs. And take a look at how that anchor VWAP is actually coinciding with the 20 and the 50-day moving average, $165. Interesting spot for Palantir in case of a general pullback of the markets, and the trend line that Alvaro shows us did work out, which it might not. I might not get that one right. Let's go see amazing Amazon. It got annihilated today, guys. And this is an easy one. So AMZN went down today 3%, and it closed the trading session at $220.71. So look, guys, the chart isn't looking good. Amazon already broke to the downside the 20-day moving average, the 5, the 50, 20, pink, in pink, white, or in white, you guys can see the 5 DMA, in green, the 50-day moving average, and take a look at the spot that Amazon is about to test. This is a rising 100 DMA, guys. Look, in blue. Do you see it? That rising 100-day moving average is coinciding with a previous level of support back from early July, and also a previous level of support back from, also early July, and a previous level of resistance back from early June. I'm thinking that since that 100 DMA is rising, if we happen to see a first test, maybe tomorrow, you never know, it could potentially be, I should say, a successful test. So it could be giving rise to a bounce, $218. If that 100 DMA breaks, then I'll keep an eye on the 200-day moving average, which as of now is signaling $214. I am keeping an eye on this level, guys. 218 bucks for potential support. We'll see about that. Say that the dip gets bought up before we see a test of that 100 DMA. There's a potential gap to the upside here, up to $226. Previous support, also a previous level of resistance that acted as such on 2 occasions. So this is not a good-looking short, by the way. Yeah. So a bunch of important moving averages were broken to the downside, so you cannot go all in. And yes, I mean, I would give it a shot at 218 bucks. Let's go see the market structure of Amazing Amazon. AMZN, what do we see here? Let's go see Amazon. There it is. And the demand is flat, slightly above the level of the supply, so we cannot make any case, neither bearish nor bullish. I'm looking at this market structure short. So now let's go see Anchor VWAPs. Let's see what we get here for Amazon. I love Anchor VWAPs, guys. Anchored volume weighted average price lines. This is actually my favorite technical indicator. So an Anchor VWAP that comes from this high that Amazon made in late July at $235. The other high comes from February. So this got to be, let me see. Yeah, almost a 52-week high. Yeah, here at 242 bucks. So if we look at an Anchor VWAP that comes from that date, we get an average price of $226, precisely the next potential gap to the upside that I just mentioned. Say that the dip gets bought up before we see a test of the 100 DMA, then yeah, this kind of confirms to us that the next potential important gap to the upside could be $226. Yeah. Big Bear AI. So guys, I am usually traveling or flying across the US, and every single time that I'm about to board a flight of American Airlines, I see Big Bear AI on a screen. So a member of my Discord was telling me the other day, because I have no clue about what this company does. So they are a face recognition company. And every single time, if you guys fly with American Airlines, they have like a screen where you scan your boarding pass and take a look at the logo. It says Big Bear AI. So I was curious about that. Facial recognition. This got to be a speculative company, right? I don't think they make they don't make any revenue or something. Let me see that BBAI, because sometimes you guys fall in love with very weird companies, and you believe that that company is a future, bruh. Let's see, Big Bear AI. $2.6 billion of market cap. They make a revenue because we have a price of sales, but no profit. So still a speculative company. So the stock has been going on a tear, a bit extended, guys. It is, so Big Bear AI is trading. So this is the 20-day moving average, which I use the 20-day moving average in order to try to determine if we have some sort of overextension to either the upside or the downside. As of now, Big Bear AI is trading 44% above its 20-day moving average. So it is due for some sort of pullback, which happened today, I think, right? No. It went up today again. It is about to make a test of this previous high at $8.67. It's a bit extended, so I wouldn't be chasing it here. If I wanted to start a trade on Big Bear AI, I would wait for a pullback. We have a previous level of resistance here at $7.34. I mean, ideally, guys, when I visualize, wow, Oracle is going on a tear after hours. Something happened with Oracle. What happened with Oracle, guys? It's going on an absolute tear. I have a position on Oracle with the members of my Discord. Oh my God, what is going on here with Oracle? Something happened here. Sorry, guys. I might need to close a position here on Oracle because it's going ballistic. I'll keep an eye on that. Okay. So, when on CNBC now, Old man, very confident we're going to need much more compute to deliver AI. There you go. It's going on a tear, $319. I mean, it's a future, bruh. Now, I've been telling the members of my Patreon that Oracle had some sort of Nvidia moment 2 weeks ago when they reported their last earnings report. So it's going on a tear. So I might close that position actually. I'm making some money there. I'll keep an eye on it. Thanks for the information. Loving myself. Okay. So circling back to BigBear.ai. So when I think that we have a stock that is extended to the upside or extended relative to its 20-day moving average, and if I wanted to start a position on that stock, ideally I want to see a retest of the 5 DMA. So a pullback down to the 5-day moving average. In the case of BigBear.ai, the 5 DMA, which is rising, and that situation could increase the likelihood for the bulls of BigBear.ai to be able to defend price in case of a pullback at that rising 5 DMA. So that rising 5 DMA is signaling as of now $7. It could be bouncing back up from that level. So don't chase it here. And if you have a winning position on BigBear.ai, and I wish you do, I would be locking in the profit at $8.70. Look, it failed at $8.70 in early July and also in mid-July. It's a potential level of resistance. Yeah. And in my case, I would be a buyer of the dip, quote unquote, buyer, at $6.83. Okay. Let me go see the market structure of BigBear.ai. What do we see here? BBAI. Okay, BigBear.ai Holdings. Let's go see. The market structure looks very good. Yeah, wow. Look at this. The demand is through the roof and the supply is going down. With this market structure, guys, and with, like way more buyers relative to sellers in minor time frames, I would expect maybe BigBear.ai to potentially being able to reverse above this previous level of resistance at $8.73. But with that market structure, I would be a bit more comfortable, let's just put it that way, trying to buy a potential dip down to $6.89. Now we have more buyers and sellers in minor time frames, so that's kind of interesting. And there goes your BigBear.ai analysis. I am curious about an anchor VWAP from these two previous highs, or from that level of resistance. Let me go see BigBear.ai here before we go over another stock, BBAI. Let's go see. And let me see. Look, $6.55. So if we take a look at an anchor VWAP, at an AVWAP or anchored volume weighted average price line from this previous level of resistance, in the case of BigBear.ai at $8.67. So BigBear.ai went up to $8.70. This was back in early July. We get an average price of $6.55. So the average market participant, or the average market participant that started the position on BBAI from that date at that price, has an average price of $6.55. They are likely to act as a potential support zone rather than supply. And that anchor VWAP is pretty much coinciding with the 5 DMA, with the rising 5 DMA that I just told you guys about. So this could be a potential interesting spot in order to buy the dip on BigBear.ai. Yep. Let's go see in less than a minute. Yeah, it's almost at $320, $318. Yeah, I couldn't close because I was streaming for you guys. I am streaming for you guys. But yeah, what do you think of Boeing? BA. So I was telling my guys of the Discord of Chrisanes today. Look, because I am, of course, a pro advisor at in the Discord of my friend Chrisane. I was telling you guys about Boeing. So I was telling you. Let me see. Okay, we've been keeping an eye on AMD. And I told you guys about Boeing today. I said earlier on today at 9:15 a.m., Aside from that, Boeing is catching my eye. If $216 can be held as support, it's a level that coincides with the 100 DMA. If held as support, it could be attracting buyers. So let's go see Boeing, which didn't benefit as much as Palantir did on the news that they are partnering up. that's curious. Look, here's this red line, guys, is your $216. Look, it acted as support as soon as the trading session opened, and from $216, Boeing went up to $219. This was a good call out, guys, for the members of the of Chris Saint's Discord, because $216 acted as support on 1, 2, 3 occasions today, and we had a bounce, a $3 bounce of $216 as soon as the trading session opened. So in the case of Boeing, guys, I am keeping a close eye on this blue line. This is the 100-day moving average. This is the 100 DMA. So let me pull up here a 4-hour chart. The chart isn't looking good at all. Look, below the 50 DMA, the 20-day moving average, that 20-day moving average is downward sloping, but and we can also make a case, guys, here that Boeing is kind of starting to make some sort of bearish flag pattern here, a non-academic bearish flag pattern. Look, it doesn't look good, guys. The chart doesn't look good. It could resolve to the downside. But if this technical situation of Boeing, let's just put it that way, resolves to the upside, we need to see Boeing closing candles above that 100 DMA, above that 100-day moving average. That as of now is signaling 300. They wish $300 were the price of Boeing. $216.30. A potential process of consolidation of Boeing above $216.30 could be attracting buyers into this technical chart. Be careful. It's not a good technical chart. It is not a good looking technical chart. Let me see the market structure of Boeing. So below 216, guys, I am constructive, and I am keeping an eye on Boeing, as I told today the guys of Chris Saint's Discord. And any bullish assumption about Boeing is canceled. Closing candles below that 100 DMA, so below $216. Let me see the market structure of good old Boeing, the flying coffin manufacturer. Look, the market structure looks ugly, guys. Demand on top, demand supply at the bottom. Demand buyers, supply sellers. The demand is represented, guys, by the blue shaded region. It is going down. It collapsed. Oh, by the way, did you guys know why? Do you guys know why Boeing has been going down? So you know that our beloved government closed a trade deal with Japan. One of, so many deals. So in the deal, Japan was supposedly going to buy, I don't know, hundreds of Boeing's aircrafts. Yeah, that's what was said. Oh, Japan is going to be buying Boeing's aircrafts by the billions and billions and billions and billions of dollars. And the CEO of Boeing said, I don't know, like a week ago or 2 weeks ago, like he was like, oh, no, yeah, the deal with Japan. Oh, well, no deal was actually closed. Japan has intense intentions of buying Boeing's aircrafts. Intense intentions. Can you guys believe that? And we were told that no, Japan is going to buy billions and billions and billions and billions of dollars worth of BAs of Boeing's aircrafts. The whole thing was bullshit. And of course, the net aggregate opinion of the markets did this. Also, we were light. So that was a lie? Okay, let's kill the stock. And now the stock is looking ugly. But above the 100 DMA, maybe, we can get constructive. We can be constructive on BA. The market structure looks ugly. Be careful here. Use, if you're going to trade this ticker, use tight stops, guys, because this could be about to resolve to the downside. So be careful there. And now I'm being asked about Lyft. Let's go see Lyft. So we got good news last week because Lyft is starting it up with Mumu. Mumu is a broker, guys. What's the name of the? I'm tired, guys. Jesus Christ, the company that belongs to Google, guys. Waymo. There you go, Waymo. Good news because they are partnering it up initially in Nashville, I think, and that partnership should be expanding, all across the country. So we'll see about that. Waymo, correct. My bad, guys. I'm super tired. Yeah. So Lyft went down today 2.43%, and it closed the trading session at $22. So I have something important to tell you guys. When it comes to reading the price action, listen up. Whenever whenever we get good news about any given stock, guys, you need to keep an eye on the price from which the positive reaction started. Listen up. So this was on September 17th. So this is the exact moment in which Lyft exploded to the upside once the partnership with Waymo's news came out. So Lyft was trading at that moment at $20. So if we happen to get good news about any given stock and the reaction of the market is positive, it is super important for that stock to be able to sustain price above the price that it had once the news came out. You see what I'm saying? So as long as Lyft remains trading above $20.20, we can make a case that the markets are digesting the news, but they are not only digesting the news. They believe, or we can make a case that the net aggregate opinion of the markets believe that specific positive news that gave rise to a very positive reaction will be positive, or that will be bringing positive things for that company in the future. So $20.20 is a line in the sand for Lyft, because take a look at a 4-hour chart. Look, so Lyft has been consolidating above a rising 5-DMA. Look, take a look at this, guys. This white line is a 5-day moving average. It acted as support 3 days ago, yesterday, and today was broken to the downside. So ideally, if Lyft can keep going up, we want to see this stock recapturing this 5-DMA and headed higher, $22.50. But we can also make a case, this is the bullish case of course, that Lyft has been consolidating above the price or the level that it had before the Waymo's partnership news came out. So if Lyft breaks $20.20 to the downside, that implies that the markets already weighed on the news and that believe that it doesn't justify Lyft to keep going higher. So your line in the sand in the case of Lyft is $20.20. And from a positive price action standpoint, ideally we want to see Lyft recapturing the 5-day moving average at $22.40, closing candles above it, or consolidating, or being able to consolidate above that level. And if that were the case, guys, yeah, I mean, we have some potential gaps here to the upside, $23.30, or why not the 52-week high that this stock made last week, $26 or maybe $25. So these two levels are very important, guys. $22.40 acting as support, positive. And I would be curious, guys, about potentially the dip being bought up in the case of a retest of that price from which, or that level from which Lyft skyrocketed once the news came out last week, $20.20. Mm-hmm. It is kind of an interesting chart. Yeah. And take a look at this. This stock could be about to make a major breakout to the upside. Let me draw a line here. Look. So the level from which Lyft skyrocketed last week coincides with a previous level of support back from October of 2020, previous level of resistance back from August of 2022, previous level of resistance back from April of 2024, and that level coincides with $20.20. It is super important for Lyft to be able to sustain price above $20.20. If that is the case, maybe we have higher prices in tech for Lyft. It's possible. Below $20.20, we need to reconcile. We need to reconsider, the Lyft situation. Let me go see the market structure of Lyft. Let's see what we see here. Let's go see. Look, demand on top through the roof, and the supply is going down. This is a very good looking market structure chart that we can actually reconcile when we have when we see the demand rising and the supply going down. We can reconcile it with this 4-hour chart in which we see, look, a rising 5 DMA. So it's important for Lyft to be able to sustain price above $22.40. This could be attracting more buyers into this technical chart. So, what comes next? Baba. Leave Baba. And let me see. We are 56 minutes in. There you go. Do you guys like the stream so far? No, Alvaro, you're such a boring analyst. No, your analyses are too long. So Baba went down today 0.71% and it closed the trading session at $163. This is a very good looking short, guys. This is a very, very good looking short. And I have told you this on multiple occasions. When you are trading Chinese stocks, you need to keep an eye on the US dollar. The US dollar is more often than not inversely correlated relative to Chinese equities. Keep an eye on the US dollar, the Dixie. Look, the DXY. If the DXY keeps going down, this is positive for Chinese equities. Look. Take a look at this technical chart of the US dollar, guys. Unbelievable. What a disaster. This is our currency, guys. What a disaster. Look. What a disaster. And if the US dollar keeps going down, this benefits Chinese equities. So keep an eye on Baba and the US dollar. And mind you guys, Baba holds, and it is kind of consolidating above the 5 DMA. The 5 DMA in the case of Baba is signaling $163. So Baba consolidates above this rising 5 DMA and starts closing candles above $165. And I mean, yeah, it looks like we have potentially higher prices coming up for Baba, guys. So the most recent 52-week high is at $170. Baba burst above $170, and you set the price, guys. Because take a look at this. The potential or the upside potential here could be massive, but massive. Look at the all-time highs of Baba. $320. Unbelievable. And look at this. We have a previous level of support. I hadn't spotted this before. Look, so we have a previous level of support for Baba, back from a very clear level of support, by the way, back from March of 2020. $170. If we pull up here a 4-hour chart, look. This is the next potential gap to the upside, $170. This thing takes out $170, and oh boy. Yeah. And mind you guys, say that, I don't know, the US dollar, takes a breather and starts to, or has a, I don't know, like some sort of relief rally or something like that. Say that Baba breaks his 5 DMA and goes down to this rising 20 DMA in pink, 20-day moving average, which is coinciding with a previous level of resistance back from March of this year and February as well. I would be a buyer of Baba more likely than not at $147. But that doesn't seem likely in the short term. So if you ask me, Alvaro, what do you think is more likely to happen? A test of this 20 DMA at 147 bucks, or do you see Baba bursting above 170? I would be, I mean, I would be picking the second potential scenario. Baba bursting above 170, in my opinion. This is a very good looking chart. Let me go see the market structure of Baba. What do we see here? Alibaba Group. And wow, look at these guys. Again, guys, this is a market structure chart. This is not rocket science. On top, you can see the demand or buyers, and at the bottom, the supply. Take a look at the demand through the roof, and the supply starting to go down, starting to decrease. We can easily reconcile that market structure chart with this 4-hour chart in which we see a rise in 5 DMA. Yeah. I am a buyer of a pullback down to 147, and closing candles above 164. I wouldn't rule out Baba recapturing 170 bucks and keep going higher. This is a very good looking chart. And take a look at these guys. This is interesting. If we look at an anchor VWAP and an anchored volume weighted average price line for Baba that comes from all-time highs, look at this. It is signaling $122. So the average market participant that started a position on Alibaba back from October of 2020, when this stock went up to 318 bucks, has an average price of $122. $122. That implies, for the most part, guys, that from here and to the upside, we didn't have many buyers trapped along the way. We didn't have a lot of important levels of overhead supply at which we could have buyers trapped with unrealized losses. That is bullish. That could benefit another leg up of Baba if $170 is finally taken out by the bulls. Yeah, that could be the case. Sure. Guys, I got to wrap it up. It's been an hour. Yeah. Thank you very much for tuning in. Thank you for watching. Thank you for listening. I've been streaming, like all day long. Yeah, I am live streaming for the members of my Patreon in Spanish. At the same time, I am answering questions for the members of my Discord in English. On top of that, I am, calling out stocks, increasing server. So at this time of the day, I am like running on fumes. Very tired. I really appreciate you guys. Watching my streams on Tuesdays. Remember that on Thursdays I am doing a podcast with my friend Gorilla with glasses, better known as Dan Frayani. So yeah, let's see what happens. I am still curious about this trend line that I just told you guys about. I am not making a full bearish case here because the technical chart doesn't confirm it. But we'll see what happens, guys. Yeah, maybe the bulls can burst above 6,700 points in the S&P 500, and we are headed to 7,000 points. We'll see what happens. Thank you very much. Yeah. Enjoy the rest of your day, guys. Take care. It's good to see you always. Bye-bye. Thanks. Bye-bye. Take care, guys. Bye.